The entire team over here at Finance of America, you couldn't be in better hands. From start to finish, from what I see on my end of things, is they close the deal on time, if not early, and their communication is second to none. So you are in excellent hands, and not only do they do that, but they take time out of their schedule for situations like this where they can help further educate you. I know there's a lot of brand new realtors in here today, so congratulations on getting into the market at a fantastic time. These guys will help educate you on what you need to know as you're moving through the process. I have a team over at my office. I'm right on the south end of Kitsky Lane, and we take things from the minute the phone call comes in, whether it's a text, a call, an email, and we communicate with the clients how you want us to communicate with them. Most importantly, I think for the lenders, it's the binder of insurance, right? So you're already in the transaction, and they need their documents. I don't know how to use all your terminology, but they need their documents so that they can move forward. We're on it. Most insurance people will tell you they'll get it to you within 24 hours, which is a fantastic promise. I would say we like to promise that we'll get it to you within the hour, and when we have those requests come in, it's usually a little bit faster than that. So I would love the opportunity, if you've got any questions, I've got some business cards out. I would love the opportunity to chat with you and help educate you a little bit further on the insurance experience. What's important to know when you're insuring your clients, whether out in the rural areas or right here in town or in the mountainous areas, there's a lot of different things to consider as far as insurance coverage. And that's where I take my job very, very seriously. Every person that crosses my desk becomes part of my family, which I think is why the culture for us works so well, because we have a family atmosphere here, and I just kind of like to continue that relationship. So thank you so much to the entire Finance of America team for the opportunity, and I hope you all enjoy your lunch.
Thanks so much.
Literally, your clients will love her. So it's a great thing. Couple of housekeeping notes just real quick in case you haven't been here before. The bathrooms are around the corner, right, at that back corner, right. If you run out of water or want more, there's more in the back of the room. You all have a packet in front of you, which is a handout, so you can kind of follow along, take notes as we go and what have you. A couple times you might be like, wait, there's more in this packet than there is in here, because we're trying to be respectful of your time. But obviously, if you wanted to go back and look a little more in depth at a few things, you're welcome to do so. I just want you to know if that doesn't align. I know a couple of you had told me you have to leave early, you have a commitment, let's say at 1 o'clock. We just ask when you leave, if you would please fill out, there's a survey at the end, which we'll ask you all to fill out at the end, but if you could fill that out before you go and just leave it at your desk or your table, that would be amazing. That helps us a ton, and it helps us to know who actually was here. So, that being said, here's our team. I'm Stephanie Arena. A lot of you probably got the invite from me. I email and what have you. The marketing, business development, client concierge. I kind of wear different hats depending on what we're doing, but I really am here to help you guys with your marketing. Is the biggest thing for you to know that's in this room. So if you need ideas, want to do different things, want to hold seminars, classes, flyer, neighborhood, whatever it is, if you're just like, I'm new and I need to get business and I don't know how, like, please reach out to me. That's literally what I spend my time doing all day, every day, and I'm here to help brainstorm with you. We have Kevin, who's the branch manager here. Angela, Michael, Cameron. This is basically our Reno office, and you get into some Fernley peeps. Ashley's here from Fernley to represent, and Winnemucca. So we have a presence all over the state, and we are nationwide. So we are all over. So that being said,
let's roll.
Let's roll. I'm going to kick it off to Kevin. And this is our agenda and what you can expect to learn today. And please ask questions.
Take that clicker.
And feel free to stop us as needed.
Right on. So Mortgage 101. So first off, real quickly, how many guys, by raise of hand, how many of you been in this industry less than a year? Rad! Okay. Right on, right on. So you came to the right class, and if you've been here longer than a year, you're in this industry longer, you're good refresher, because there's going to be some dialogue in here that's going to help you in your future transactions, especially with the market the way it is, okay? So let's dive into it. So we're gonna talk about the basic requirements for every mortgage, okay? What does that mean? What do we have to do, right? Loan types, then we'll get into the loan process, talk a little bit about sales skill, things like that, and get rolling, okay? So what are the basics? Oh, we got the fades on here. Steph, we forgot to take those off. All right, so every individual, basically they have all common elements that we have. They have to have a credit history for all of borrowers. We need credit. We need income, right? They gotta have a job, okay? Now, there's some 30,000 foot view questions I'm gonna have you guys talk to potential buyers about, because it's okay if you ask questions about their income. Now, I know it might not be as comfortable, okay? But if I'm calling you saying, hey, you know what, I wanna look at a $500,000 house, you probably wanna make sure I'm employed, okay? Just a real small detail, right? We're gonna talk about assets. Assets, again, they gotta have some money in the bank, okay? The days of, hey, I have no money, I have no income, no savings, but I wanna buy a house, are gone. Okay, so let's we're gonna be real. You're gonna find that with me, I'm gonna be like real with you guys, okay? Not a lot of fluff, because you are my partners, right? So when you have an opportunity to have a lender on your team as a business partner, myself, my team takes that very significantly, okay? Business partnership is so important for really everything that you guys do, right? And that partnership, it's instrumental on how we support families. We all have a common goal, keys in hand, right? You gotta have partners, insurance, title, lender, everybody rowing the same direction, okay? So that's very important on how we flow. Loan to value, LTV. You guys are gonna be all these different acronyms: LTV, CTC, COE, CD,
C of E.
C of E. DTI, thank you. I mean, it's all these crazy acronyms, right? What the heck are those? We'll get into some of those.
WTF.
WTF, right? TBD. So when you get into acronyms, you guys that are newer, obviously there are some acronyms here. Please stop. If you don't understand, raise your hand and be like, listen. Because if you don't know, odds are there's going to be somebody next to you that doesn't know. So during this process, I want you guys to stop us and ask some questions. Okay, so the first thing, let's dive into it. So I said you got to have income, right? So income, I'm just going to roll through this. 2 years employment history, okay? Very important. You got to have 2 years. You got to be at your job for 2 years or same type of line of business, okay? So in other words, if I get a job offer letter and I change jobs, is that okay? Yes, it's okay because I have a job offer letter and it's as long as it's in the same line of business, okay? Now we gotta have some pay stubs, right? But I do have some people that are if you're ever dealing with any reload type situations, okay? I can use a job offer letter. We can actually have somebody's pay stub after the note date, after they close, okay? So as long as it's the same line of business. So for example, engineer relocating over, we had somebody relocate Megs from Dubai. Remember that client? Was it Dubai?
They worked for a company, but the company was overseas and they moved back to the United States. So yeah, we have one right now that she is going to a university over in Maine, and she went from Oregon to Maine. We have
small commute.
Doctors coming from other towns. Yes.
So again, the other piece is, this is one that people don't realize. So somebody graduates from college, they have transcripts, they are an engineer, they have a job, they are employed, but they don't have 2 years history. Let's say they've been on their job for a year, but they're ready to buy a house. Guess what? We actually can use their transcripts as kind of that 2 year history. Okay, we can use their college because they went to school, they had education in that line of field, so we can use that as their work experience. Cool?
Real quick, what's the gap that's like really bad? If someone loses their job.
Right. Depends on loan program. Okay, so like FHA can't change jobs, three different jobs within the same year. Like FHA frowns on that. Okay, like where is this person doing, what's going on? Gap in employment, we always have to have a letter of explanation, okay? But if they have like 6 month gap, then we have to go back further, So we still have to net that 2 years work history. In fact, I have one of my loan officers in Idaho is experiencing this. We were on a call on Wednesday, and they had to go back to like 2016 to get like 2 years work history. Yeah. So if there's gaps, we just have to, you know, educate. Yeah.
They can't change more than 3 times, even if it's in the same industry. So if like they're in a service industry, they're known to kind of change.
FHA wants consistency, okay? But that's where us as the lender, we deep dive into that. So not necessarily you guys are gonna get in the weeds on that, but we will, right? So that's good stuff, okay? Changing from a W-2 to a 1099, okay? All you guys are 1099 here, right? What does that mean on your taxes? You might not have done taxes yet. You get to write a bunch of crap off! Man, you guys are awesome! I get to write this off, I get to write this off, I get to write this off. What does that look like on a tax return? Line 31, which is your net, not gross, net, shows that you took a loss, all right? Well, guess what? What do you think a lender lending hundreds of thousands of dollars to you to buy a house looks at that income and goes, wait a sec, hit the brakes, okay? So on a 1099, you need 2 years history of self-employment, okay? Now, we can qualify people off of their 1099. We qualify, we'll talk about different loan programs for employment, but just keep that in mind. W-2, we look at gross, 1099 is net. Okay, so if somebody's switching from a gross income and they're like, hey, I just started a brand new company last year, rad, you're gonna wait another year at least to get tax returns, okay? Because we have to see what they're writing off. Make sense? Other qualifying income is gonna be overtime, commission, variable income, okay? So somebody's like, listen, I make 12 bucks an hour, but I make $100,000 a year. Rad, what is that other income, okay? That's the deep dive that we take. Well, it's bonus structure or it's commission or something of that nature. Then we deep dive into that, okay? We have to have 2 years of that type of income, okay? We call it variable income. Tips. Tips are great if they are reporting them. I can use tips, not a problem, if they report them, okay? Cool. 2 years averaged out, part-time employment. This is big. A lot of times people go, well, hey, you know, I got a full-time job. This is some things that we've heard. Full-time job, and you know what? I'm gonna buy a house, I'm gonna get a second job. Rad, you're gonna wait 2 years, okay? Now, if it's the same line of work, let's say I'm a police officer, but I also am like security for somewhere, right? As long as there's an additional year of that same line of work we can use. Okay? But if it's 2 different lines of work, 2 years. If they've never had a part-time job with their full-time job, 2 years. Okay? And Megan, my process is back there making sure I'm selling you the right stuff. All right, credit. Credit's big, right? A lot of time, here's the thing about credit, is that sometimes people they might say, hey, I have bad credit, but they really don't have bad credit, you know? And enough to where they couldn't qualify for a loan. So we'll talk about that. 3 bureaus, TransUnion, Experian, Equifax, okay? How we determine somebody's FICO score is we pull credit from all 3 people, and the middle score is their qualifying score, okay? If there's 2 borrowers on the application, it's the lowest middle score out of both of them. So it's not averaged out. So sometimes some people go, well, hey, you know what, I got shitty credit, but I have a cosigner. Well, guess what? Your application still has crappy credit. Okay, because it doesn't change. If your middle score is 450, then guess what? It's 450. Okay, that doesn't change. So this is some scoring model that TransUnion, Experian, Equifax utilize, payment history, types of credit. You know, all these impact really, you know, somebody's score. A lot of times people are like, hey, you know, I have a low FICO score, and I'm paying my payments every month. I'm consistent, but I don't know why I have, you know, a low score. Well, because if you have all your credit cards maxed out, well, then that's going to keep you at a low score. Okay, so there are some components there that need to make sure that they understand. Pay history is a big part of it. We don't want mortgage lates, right? So if somebody's selling a house, buying a house, right? You got to make sure that we pre-approve them, okay? Because here's the thing, the last thing you want to do is put their house for sale and they don't qualify for the next loan because they have a 60-day late on their mortgage within the last 12 months. Guess what? You're not getting a loan, okay? You're like, hey, we're gonna list your house. We got an offer, awesome. Oh yeah, you need to check with Kevin and get pre-approved for your next purchase. No, we do that way earlier, okay? Make sense?
Does it help my credit score if I just pay it down to 0 every month?
Oh, that's a good one. It's a good question, guys. Right on. Thanks for asking that. No, it doesn't help you. Credit bureaus. When I hear that tone, so you guys, Stephanie's my wife, right? So, right? So when I hear that, it's like, okay. Make sure we answer that.
You're quiet. Nobody's asking questions. I'm like, I'm gonna ask.
All right, so how many guys think? Well, big misconception. If you pay it to 0, it does not help your credit. Why?
I need to call my husband real quick so you can say that to me.
I'm recording it.
Before the due date. Never pays interest.
Right. Okay. So think about that for a second. The credit is what? Credit is extending you credit and making sure that you're responsible to repay that credit. Okay. If you pay it off, is it really extending you credit? No. It's giving you an advance. That's all that is. It's an advance. It's not credit. Okay? So yes, pay it down to $10. Tell them, listen, I'm going to go out to Nordy's, $10. Okay? But don't max it out. Remember that last screen. I better not get a call. Okay? So again, keep that in mind.
And they want to see the payment history too.
Right.
So by having a payment that you're making all the time, whether it's $5 or not, they want to see that. Raise the limit.
Right. So you can raise the limit. It's a good strategy there as well. Okay? Kind of Surgeon General warning, you can't mix and match credit, can't take all the good from here and all the good from here, right? Some loan programs, we have to pull everybody, if you're married, we have to pull your spouse's credit in as well, even if your spouse is not going to be on the loan. Meaning not FICO, but debts, okay? So some people are like, hey, my wife, some other people, not me, has scrappy credit, right? Okay, let's try. Verify that. So then what happens is it's like, okay, well, let's leave her off the loan. Okay, fantastic. I run that person's credit, but what they don't realize is, hey, I need your wife to authorize this because I have to run her credit to import her debts, okay? Because she might have a bunch of Nordy's and Macy's and stuff like that, right? And so I got to pull in the debts. So doesn't impact the score, but it could impact DTI. Anybody know what DTI is? Debt to income ratio. You got it. Oh, you all passed your test. Is that on the test? Here you go. You're not gonna necessarily have a test today. Okay. All right. So credit score. What are the minimums? Okay. Depending upon program, FHA we can go down to 5%, but they need to have money in the bank. They got to put 10% down. Okay. 580 is 3.5%. Conventional is 620 FICO score. VA is a 580. We're going to talk a little bit more in depth about these programs later on. USDA, not grade 8 beef, but that is the actual loan program. That's 620. Most down payment assistant programs. Is it 640 or 660?
I think it lowered to 640.
Yeah.
Let me check on that. That's why you have a mortgage advisor as a partner, right?
Changes all the time.
You call any one of us in the office and be like, hey, you know what? You're talking about down
I'm
payment
almost sure
assistance.
they lowered it.
Okay, Megan said almost sure, so that way you call us, okay, then we'll just give that, okay? So,
Kevin, what does DPA stand for?
down payment assistance.
Thank you.
Okay, all right, so, if here's what we do. We check boxes.
You're gonna check? Thank you.
That's what we do, okay? Real simple. You wanna buy a house? Credit, check. Income, check, okay? You got savings, check. What program are you doing? Based upon the program, here's the guidelines. Check, 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 check. Ooh, I don't have that box checked. Okay, now we gotta talk to the client. Okay, how do we get that box checked? Okay, guys, it's a bunch of check boxes, right? So keep that in mind. Just like you have a flow in your contracts, we have a flow in our pre-approval process. Okay, down payment. Down payment. What is a down payment? Where does it come from? Asset accounts, okay, retirement accounts. We can use retirement accounts, okay? Now, here's the key about retirement accounts. We're actually in a situation right now, it's, my forehead hurts, got a borrower on the phone, okay, buyer on the phone, hey, I have a retirement account, awesome, send me the statement, verified, has a bunch of funds in retirement, Okay, great. I'm gonna get a gift. Okay, great. You need to pay off a bunch of debts for the debt to income ratio to line up. Okay, fantastic, no problem, we can do that. Awesome. Realtor goes out, pre-approved, in contract, woo-woo, here we go. Okay, check this out. Reach out to the borrower, and actually Megan's in the process of emailing back and forth and says, well, there's no gift. Megan comes into my office and says, hey, I thought there was a gift with this people. Yes, absolutely there's a gift. They're saying there's no gift. Wait a sec, pump the brakes, what? So I call the realtor, they said there was a gift, right? Yes, there's a gift. They're saying there's not a gift. Okay, so now I'm talking to the borrower, I'm like, okay, well, you have enough in your retirement account. Now we have to put on paper 60%. Okay, so if you have $100,000 in retirement, on paper I can only use 60%. Why? Think about it. It's a retirement account, 401k.
Well, to pay taxes and.
You're gonna get nailed with penalties. You pull it out. Okay, so as a lender, we can only put 60% on there. Okay, so 100,000 drops to 60,000. Well, this person's cash to close lines up with what that 60% was. Beautiful. Hey, okay, Mr. and Mrs. Borrower, no problem. Okay, we have a statement. We just need to know what's going on with that account, and we're closing in a week and a half. I can only get $28,000 from that account. We have a $69,000 cash to close. Cash to close means down payment, closing costs, right?
And pounds.
Everything, fees, right? So that's cash to close. When you hear a lender say cash to close, that's the whole, you gotta bring that amount into the money, into the table. So now this person's going, I can only pull $28,000 out of that. Whoa, 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 pump the brakes. What are you talking about? Well, that's the amount that the retirement company will give me. Okay, now you're talking a different thing. You told you were gonna withdraw that amount. Now you're talking probably a loan that they're taking, which we don't have to count the debt to income, but they're pulling a loan. 401k company is gonna say you can only pull a max amount, okay? So my forehead hurts, so we'll see, right? I'm like, you got till Friday, you need to figure something out.
How long does it take, to the funds to be actually like?
Beautiful question right there, right? So you pull from 401k, 401k company's not gonna wire directly to the bank, okay? So this process has to occur very soon in the transaction, which we educate the borrower to get their cashier's check from wherever they're withdrawing, okay? And then the other piece is once they get that check and they deposit it in their bank, their financial institution could potentially hold that for 5 to 7 days. So you get a check, deposit it, great, I'm gonna go tomorrow with the title because I get to sign and I get my keys and all that good jazz. Pump the brakes. Wells Fargo says, sorry, those funds are not available for 5 to 7 days. Okay? All right. Anyways, gifts, we need to source the funds. Basically, everything needs to be sourced. Okay? Right? So if somebody's giving a gift, we got to have a gift letter. Mattress money, does that work? No. Okay? Mattress money, pillowcase money, no, 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 no. We have to source everything. You want to sell an classic car? Fantastic. Call me up. I might buy it. But the reality is you need a bill of sale and you need to prove value and everything like that. We have to source where funds come from. If there's a large deposit, we have to know where that came from. So somebody can't just go, okay, I'm ready to close. Megan gets a transaction history and they have a $50,000 deposit in our bank that we have no idea where it came from. Megan's going to lose her mind. And trust me, in this office, we don't want Megan to lose her mind.
So if it is mattress money and then someone puts it in the bank,
how do we work around that? Great question. Family gift. Say, you know what you're going to do is, does a family member have an account with, let's say it's $50,000, okay? I wish I had $50,000 in my mattress. Okay, but a $50,000 mattress money, or $10,000, it doesn't matter, right? So anyways, what they do is a workaround is, hey, listen, mom or dad, family member, brother, sister, whomever, do they have an account that has those funds in it? Yes, great. Do not deposit that money. They're going to gift you money. We'll get a gift letter and proof of where that gift came from, and then you're going to go, here you go. That's a workaround. Okay?
Or they have to wait for how long?
Oh, on a deposit, large deposit, you got to wait. It's a 2-month seasoning, y'all. So we cannot show On conventional, can be 1 month. We can get away with 1 month on a government loan, but that sucker cannot show as a deposit on your bank statement. So you know when you deposit a bunch of money, right? It shows as a deposit. Then we have to wait 2 months so it doesn't show as a deposit.
Does it have to be a family member?
Has to be.
Okay.
Yep. Neighbor, friend, can't be. Megan Megs.
They just changed that.
Oh, I love changes.
They just changed, Fannie just changed it because there's domestic partners.
Yep.
And, so yes, it did, it used to have to be a sister, a brother, a mom, a dad. It couldn't be your like third or fourth cousin. It had to be, intermediate family, but they did just change the, domestic partners and,
we could do
and like,
fiancés.
and fiancés and stuff like that.
So the verbiage is they have to have a vested interest. That's the verbiage, okay? So fiance, domestic partner has a vested interest in this property. So, totally cool. Debt to income ratio, okay? This is the total monthly income against their liabilities that we pull on credit, or there's some liabilities that aren't on credit that we have to know about, okay? You go out and buy a brand new car, might not be on the credit report. We need to know about that. Y'all are showing properties and somebody rolls up in a brand new car, y'all might need to let me know, okay? Let your loan officer know. Me, Michael, if Angela's working on a pre-approval with you, because that's what she does, y'all need to let us know. Hey, they new Audi with paper plates, Kev, do you know they're driving something new? Okay. But again, just let us know that, because all that has to be is impactful. Alimony, child support, that is a liability. Okay, got to know about that. Yeah.
I gotta back up for a second.
Okay, back it up.
You said 2-year employment history.
Oh, dang, you're going way back. Yeah, 2 years.
But you kind of said you could go back to 2016, so it's not like.
Well, we're trying to get 2 years. We have to get 2 years consistent work history. So in this case,
It doesn't have to be the last 2 years.
We're gonna start with the last 2 years. What did you do the last 2 years? Okay, if you have the question was a gap in employment. So in the last 2 years, you were not employed for 6 months. Okay, then I might need to go 2 years and 6 months to get my 2 years.
I didn't even know you could do that.
Yes, yes, yes.
Cool.
Everybody's learning today. Everybody's getting full and everybody's learning. I love it. Okay, it's a good question, great stuff. And if we need to back up, y'all, I'll moonwalk in here, yeah.
Can I add on to that? I'm just wondering what does that show? Like if I didn't work for the last I didn't work at all for the last 2 years.
Okay.
So you went back to 2017 or something to find my work history. What does that do for you to show that I had income? Because I don't have the income coming in now.
Right. So you're flipping now to this whole 1099 deal.
Yeah.
You need 2 years going forward.
Okay.
Doesn't matter. I'd be like, hey, I love you. I can't wait. In 2 years, we're gonna get you approved. Okay. Or we're gonna use somebody else's income. Right. So in that case, a little bit different because you're flipping to a 1099. Okay. But if I have an employee that didn't work for 2 years and is now a W-2, we need to find out what happened that 2 years. If it was like, listen, I'm sitting around playing Xbox, eating Cheetos, odds are we're gonna need 2 years. Okay? Hey, you know what? I was on disability, workman's comp, I was injured, now I'm back to work, okay, different story.
Okay.
Or maternity leave, right? We can't discriminate, right? So, hey, I was on maternity leave, I chose to take the full year of maternity leave because you can take the full year, fantastic. Then I gotta go back, maybe 2 years to get that, or 3 years. Make sense? All right.
Kevin, I want to add to that real quick. So that's just if it's an individual. So in some cases you will have a partnership, husband and wife, domestic partners, whatever the case is. Let's say for your example, if your significant other is employed and can qualify for the loan by themselves, you can still go on the loan and we would not necessarily need to use your income.
Okay.
Right, am I correct?
Correct, yeah.
So we could use the
We gotta use your debts.
Well, you use your debts, but if the other person's income can still get you guys in that qualifying range, you don't have to wait that 2 years.
Right. Yep,
So we have to wait the 2 years to use your income.
And that's the flexibility we have, right? It's like, okay, here's 2 people going on a loan. this person just flipped, yeah, we'll hold off on putting you on, right? So no big deal. And I'd much rather have you off that, because if my underwriters go, oh, she's 1099, we have to wait. I mean, you know, underwriters, eyeballs, y'all. There's multiple eyeballs that look at a file. Okay, keep that in mind. So when we're talking about debt to income, multiple eyeballs. I look at a file, Angela looks at a file, Megan looks at a file, underwriter looks at a file, quality control looks at a file, funder looks at a file. Who am I missing? Funder looks at a file, title's gonna look at the file.
There's a lot of them.
Closer's gonna look at a file. So these are all sets of eyeballs. The problem with sets of eyeballs is they all have opinions. Okay, they all have to satisfy the investor. Okay, so any set of eyeballs can absolutely question, pick something out, pump the brakes, blah, blah, blah. Okay, yeah.
Is it true that if you have a certain amount down, no eyeballs have to advance down?
No, eyeballs are eyeballs. I don't care if you're borrowing $1, y'all.
Okay.
I mean, eyeballs are gonna look. You know, there is that misconception, right? There's like, hey, you know what? They're putting 50% down. Awesome.
We're
They're not
having
a
$5
cash
million in the
buyer.
bank.
Okay, if they're asking money for money, we're gonna look.
Okay.
Yep, so just keep
It
that in
might
mind.
reduce the amount of eyes that are on your file, but.
There might be a little more
there's gonna be
flexibility.
files, there's gonna be
Okay.
eyes on it.
Right, there's not gonna be as much scrutiny, right? There's not gonna be much, you know, as many breaks with those eyeballs.
Yeah.
But there's gonna be a few more passes on somebody putting 3.5% opposed to somebody putting 50%.
Okay.
Does that make sense?
Yeah.
Good stuff. Here's the thing I want you guys to dive into when you are talking to a prospective buyer, okay? This is 30,000 foot view. This is what you're gonna help myself, Michael, when you're talking to us and saying, hey, I got a lead. Are all leads created equally? No. Okay, we gotta make sure that they got some dough, okay? So real quickly, as a lender, this is how we factor in debt to income ratio. Gross income, now we're talking W-2. Take 48% of that, okay? So we're taking gross. I'm not gonna figure out what you're doing, you know, what electrical bills you're paying, how much you're paying in groceries. We all know it's a bunch. So I'm not gonna ask that. I'm just gonna take 48%. Then from their credit, I'm gonna pull out monthly credit card payments. Some people are like, hey, I got $15,000 in debt. I don't care. I care about how much do you pay monthly minimum, okay? Car loans, you know, side by side, whatever. Student loans. A lot of student loans are in deferment, but we still have to count a percentage, okay? Conventional Fannie Mae requires us to have 1% of that total loan amount be added as a payment, okay? You follow me? So if it's a $50,000 loan amount, Fannie Mae requires a $500 monthly payment that we put in the debt to income ratio. Freddie Mac and FHA, Govy loans, only a 0.5%. So there's times where I'll flip somebody to a Freddie Mac loan if they're doing conventional because I only need to count a 0.5%. Might help their DTI, okay? Freddie's a little more picky than Fannie, so we typically go to Fannie. Child support, alimony, separate maintenance, okay? Now, there's sometimes we might see, you know, a deposit, regular deposit in somebody's account. We'll ask what that is, right? A divorce decree, what does that look like? Situations like that, we have to ask. But so this 30,000 foot view. Guys, how much do you make? Make 100,000. Great. The lender's gonna take 48% of that, okay? Then what's gonna happen? Oh, here's my example right here. 72 gross, 6,000. Real simple. 2880, that's that 40%. Less a car payment, less credit cards, 2,200 bucks. You guys are like, right on. I can find a house for 2,200 bucks a month in principal and interest. No. Principal, interest, taxes, insurance, mortgage insurance, and HOA. This has to fit in the whole payment, okay? So when we look at this, sometimes...
So I got excited when Kevin said that, and I was like, oh, 2,200, well, look at this payment chart.
Stephanie's out shopping.
Yeah, I was like, okay, interest rates are about 6%. That means somebody can get a $375,000 home, right? Because it's like, well, let's find 2,200 on this chart. Kevin goes, whoa, 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 pump the brakes. That's what he likes to say. So anyway, I had to input on that because it's easy for us to forget about the insurance, homeowners insurance,
HOA, taxes.
So
Unless
this is
they
just
put
principal and
20% down,
interest.
because there is no PMI, right? So
But
Right.
they still have to pay a homeowner's insurance.
right.
Yep.
So if y'all are looking in Fort Lee, anybody out in Fort Lee? You know where Fort Lee is?
The homeowners.
South off of Double R or something like that,
Condos.
right? You wanna know how much those HOAs are? $650 a month. Yeah, you wanna impact somebody's buying power? Put them in an HOA of $650, okay?
Cause we have to include that.
Gotta include it in our ratio.
And we're glad you do.
Yeah. Okay, and the reason why we have to include it, because HOAs can file proceedings for foreclosure, okay? Okay, all right. Borrower funds must be seasoned. We already talked about that. Earnest money be provided with the contract. You all know about earnest money, right? Large deposits need to be sourced. Okay, we already talked about that.
Can I
So-
type on that earnest money for the new?
Yeah, fire
for
away.
the new ones? When you guys get the earnest money check, please bring it to title as fast as you can. Because we run into a lot of people that the agents hold on to earnest money. We're actually doing one right now in Maine, that they held on to it until like 3 days ago, and we're trying to close by Friday. And I have to get that sourced, I have to get it, know where it came from, they have to deposit it, stuff like that. So just when you get them, just take it directly to escrow.
And I think it's one of our rules.
Yeah.
Yeah, Maine is a different program.
And Maine is
We
a
don't-
little different program. I'm just
Get it
gonna-
to title.
Okay.
Okay, sources, we've talked about checking savings, CDs, gifts, this is sale of a property, which is the estimated settlement statement. 401k, we've already talked about that. Sale of stocks, bonds, just liquid is fine, right? No pillowcase, these are all gift funds, right? Gift funds, okay? All right, gifts can be used for partial down, full down, closing costs, you know. It does say reserves, you can't use gifts for reserves. They have to have some dough, okay? So for example, what are reserves are principal, their mortgage payment set aside. So some loan programs, let's say manufactured housing, okay? Manufactured housing, you have to have 2 months reserves, okay? So they have to have 2 months of their mortgage payment, principal, including principal and interest, in an account that we have to see after they close. Okay, so not just down payment, not just cash to close, they have to have those funds in an account that we can see. Okay, make sense? Must be verified. We'll provide a written letter. Okay, so it's all kind of part of the process. When somebody is in pre-approval status, I'm not gonna call their parent and dig deep into that. Okay, even with this one that's going sideways, I have to trust our borrowers that what they're telling the lender is accurate, okay? I mean, there's a certain point where you have to go, okay, mom and dad is gonna give you a gift, awesome, fantastic, moving on. We'll get the letter while we're in escrow, okay? Makes sense? All right, and this is just talking about a letter, but we will have, it's a company thing. This one here, a gift from a family member could have tax implications. We are not the IRS. We do not report to the IRS on this topic. Okay. So, you know, if you have somebody that's like, oh, I'm gonna give a gift, but I can only give this amount because I'm gonna give tax. Listen, you know, that's they have to talk to their tax person, but we aren't gonna necessarily say, hey, IRS, y'all gave your kid, you know, $50,000. Okay. All right. So Ange is going to come up. She's going to talk about the pre-qual and the pre-approval and all that good jazz. Ange, you want me to control this?
Yes, please.
Okay.
Hi, everyone.
Right.
I'm super excited to see so many new realtors. That is really awesome. Want you to know though, make sure you go to all of the classes that these guys teach, because education is the key on that one. Yeah. So with that said, I wanted to see how many in here know the difference between a pre-approval and a pre-qual.
You want to give me the answer, dang it.
Okay.
What is the difference? Give me one.
One, the qualification is like not as in-depth as a pre-approval.
Okay.
Yeah.
Specifically on what?
On borrowing money to go purchase a house.
No. I mean, like in depth. Like you're like
She
in
summed
depth.
it up right there.
Right.
I want
Yeah.
specifics. Like what was not verified?
Oh,
Because it's the word.
We just went
Hey, I read
over a
it.
few.
Yeah.
What did we go over? Credit.
Income.
Credit could be pulled. Credit could be
Yeah.
pulled.
So
okay.
it's just basic information, you know, like, hey,
But maybe not income. Not verified.
You could be qualified and your income not be verified.
That's the difference between a pre-qual and a pre-approval. So you're absolutely right. Ange, take it away.
Well, you pretty much just
No,
said
I
what
did
I was
not.
gonna say.
Come on, you got
You
it.
don't always have to pull a credit report on a pre-qual, so that's more of the clients just taking a verbal. We've talked to them, you guys sent somebody over, we're on the phone. Oh, you make $100,000 a year, perfect. You have $250,000 in the bank, great, we're writing that down. Credit score, maybe around 650, 700, not super sure on what that's gonna be, but we're gonna kind of go in that range, and that's what we go off. That's a pre-qual, so we're
We don't
saying-
go off of that. Let me clarify.
No, we don't, yes.
Yeah, we
But
do
that
not
is a-
do pre-quals.
That is a pre-qual, it's just everything together going, this is what they told us, this is what we think their range is. However, we don't send any approvals out or anything based off of a pre-qual. We go to the pre-approval. So with the pre-approval, we have to actually verify and see your income, so pay stubs. If you're unemployed, we need to see tax returns or 1099s. We actually are gonna look at that, we are gonna tear it apart, basically. We're gonna comb through everything,
But we're gonna be nice doing it.
very nice. Along with your assets.
Ange's gangster. She's just like, we're gonna dig and tear it apart, man.
We wanna make sure up front we have everything done so there's no hiccups for you guys when we're going through the process.
And I think that that's really key, right? And that's the reason why Angela is so good at what she does, is because we really care about our families. We care about your referrals. We care about, really the information that we give to you empowers you to go, yes, these people are ready to buy. And we don't take that lightly. Any one of my LOs in this office, I think that's really what we,
And I wanna jump,
different.
exactly, to kind of go off of what he said, the families, huge. And what we all have to remember in this situation, sometimes we get borrowers that are a little bit, they're just not working with you that great, but we all have to remember, we don't know what's happening in that person's brain, what's going on in their life.
Yeah.
So at that moment, they become part of our families. We just wanna take them in, we wanna love on them as much as you guys do. So they are super important to us, and we wanna continue on with that relationship with them.
Love it, love it, love it. So pre-approval, pre-qual. So y'all, let's talk about where do you get a pre-qual? Who would give a pre-qual? Not Finance of America, right?
Rocket mortgage.
Yeah, Rocket Mortgage.
Love it.
Hands down, I'll throw them under the bus. They suck. Oh, this is being video. Jeez. Okay. Sorry, Rocket. I'm gonna send somebody to the moon. All right. So here's the thing. Yeah. So online companies, somebody that's putting just their information in. I mean, all of us know. I mean, there could be somebody that starts with Wells, ends with a bank. Whatever. So again, just remember that there's significant differences. So pre-approval, like Angela said, we're going to take a full loan application. Okay, we want to make sure that we know where you're doing, what you have, et cetera, and so on. So again, very, very important. This is power to you guys, right? This is what you're sitting there when you send a lead to us, okay? You're sitting there going, come on, get back to me. Come on, I wonder if this person's ready, right? Come on, call me up. What's going on? Kevin, where you at? All right? So here's the thing, is we are doing all this and verifying and validating all of it, so that way when we do call you and say, hey, rock and roll, get them in your car, let's go!
And
they're ready.
another key thing for the realtors to look at too, versus maybe banks, because there are lenders out there who do the pre-qualification. Make sure you check your letter.
Yeah, so what's on that letter? Good segue. That is the baddest sound.
I know, I want that.
Let's juggle it.
That's serious, that was rad.
So if they're the listing agent, they should be.
Yeah, so here's the thing about pre-approval. So all this should be on the form, right? Loan type, purchase, estimated PITI, principal interest tax and insurance, PITI, MI, mortgage insurance, how much seller paid, blah, 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 blah. All this should be on there, okay? But here's what Finance of America does, what I do, what Michael does, is we call the listing agent, okay? So what happens is, when let's say Angela's working on all the magic, okay? Kevin, we got a pre-approval, awesome. I do the initial call, I have that high trust, like why? Why do you want to buy a house, things like that. Tell me a little bit about 30,000 foot view, fantastic. Then it goes into Angela's world, okay? Angela's collecting and verifying everything that they told me, okay? Angela comes back to me and says, we have a pre-approval. Awesome, fantastic. We review it together. I'm reaching out to them. You guys are going out, buying, or shopping. Once you get a contract, I'm calling the listing agent, okay? So that's huge. Not on a pre-approval, that's when you make an offer. Sorry, I'm going ahead of myself. Okay, Ange, awesome job. Big round of applause for Ange, we love it. One side. Okay, so I gotta fly here because conventional. Okay, 620 FICO. Debt to income ratio. The first number is the housing payment. Okay. So if you guys went online and looked up, what's the debt to income ratio? Basically, these examples are going to be what you're going to look at, what you can find online. Okay. There is some level of flexibility. Keep that in mind. That's what we do. Okay. So conventional, backed by Fannie and Freddie Mac, 5% minimum down payment, 3% first-time homebuyer program, something special like that. PMI, private mortgage insurance if they're not putting 20% down, okay? Maximum loan amount, guess what, y'all? $715, went up to $715. So how many guys are seeing conforming loan limits have changed to $715? What the hell does that mean? Whoopity-doo, okay? Listen, here's the reality. $715 basically means your borrower only needs to put 5% down, okay? $715, a week ago, it would have flipped to a jumbo. They would have had to put more money down. Okay, so listen, it's an awesome thing that it's moved up to $715. That's what it means. I love that you're like, I don't know.
Well, I heard it the other day in our meetings.
Yeah.
Someone ran the numbers too of like, oh, if you're just borrowing money, what's that actual? And we came up, it was about $840 house price.
Yeah.
If you had 20% down.
Yeah. No, and so they're missing the boat there, right? Because we can do a jumbo at 20% down. Okay, what's powerful for you guys is if somebody wants to do a conventional loan, they can put if they've owned before a minimum down payment of 5%. That's the power, right? So it's like, okay, rad, we're not in the jumbo arena. Let's go look at a $715,000 house. Before it was $647. That's the power of this number moving up. 5% down, less down. Jumbo, typically 10 to 15% down.
But you can look at a house for more than $715, right?
100%, yeah. Then we'll get into the jumbo. Now this is
that's just your
loan amount.
Yeah.
Right. This is loan amount.
Yeah.
See, man, come
She's
on.
attractive,
She's not a lender in disguise. What's going on? Okay, yes, loan amount. Good stuff. Okay, moving on because I'm flying here. Escrows can be waived on a conventional with 20% down. Okay, what are escrows? Tax and insurance. Somebody likes to pay it on their own. Awesome, fantastic. They got conspiracy theory. The county makes money, more money. Whatever. Reserves required for rental properties and second homes. That's that reserves, right? So somebody doing second homes, rental property, investment property. We talk about sales on that. Listen, everything's based upon credit score, loan to value, debt to income ratio. Okay. Rolling here, ideal clients, everybody, okay? We want them all. One more, okay. But is there a difference? Is there a difference with somebody? So here's what's key if you're on the listing side. If you get two offers and one's a conventional and one's an FHA, do not go, oh, well, man, we got to take the conventional because the FHA is FHA. Okay, no. The reason why is because that PMI, that private mortgage insurance, if somebody has a sub 700 FICO score, I've seen PMI in the $600 a month range for private mortgage insurance, where an FHA loan could be like $300 or $250. Okay, so it's not necessarily a bad thing on FHA as long as the house, can go that. But the reality is, call your lender or call the lender. Or if you want me to look at an offer, call me. It doesn't matter if it's my client or not. I give you feedback. The people that are in here partnering with me, I give you feedback. Right, Carolina? Carolina had a client, VA. She's like, hey, VA entitlement. You remember that? When should have this been found out? I said during pre-approval. She's in contract with her listing, and all of a sudden the veteran is not eligible for their VA in the closing. Yeah, I was upset from my partner. And she was like, you know what she said? I'm a listing agent. That's the first thing she said. I said, all right, you get out of jail free. All right, credit requirements, 620. BKs, they're seasoning. If they have a BK, they gotta have some seasoning. They gotta have some time before a lender's gonna lend them money, okay? Conventional, 4 years, 2 years for a 13. Short sale, 4 years, 7 years, foreclosure. They had a property, might have to flip it to a different loan program, okay? Property allowed, listen, primary residence, second homes, investment, single family, SR, FR. So yes, so we got acronyms going on, 2 to 4 units. Max is 4 units, okay? We have some commercial programs that can go higher than 4, but 4 is, listen, if you have somebody that, you find a fourplex and you have somebody that's gonna buy and live in one of those units, come on, man, they get to finance that as a primary residence and have residual income on the 3 other units. Come on, that's hot sauce. Condo, you know, we'll get into FHA in a minute. Man homes. Okay, seller credit. This is significant. You all need to know this. You need to write this down. You need to stick this in your mind. This is how you win in today's market space. Why are people on the bench right now for purchasing a home? Why are they sitting on the sidelines? Okay, some say the rates.
Housing prices.
I say their monthly payment. Okay, you stay off the conversation of rate. Okay, that will go down a line that you're not going to get a buyer. Okay, well, you know, listen. Okay, great. I understand the interest rates. Yeah, we've heard the interest rates are going up. What is comfortable for your payment? Okay, what's comfortable for you and your family? Get on the payment topic. Okay. Seller concessions mean that a seller can contribute a certain percentage to buy down that rate, okay? So I literally have people that are on the sideline that I'm encouraging my realtors to say, have them reach out to me, or if they're Michael's clients, have them reach out to Michael, because the reality is they can get back in the game with a seller buying down the interest rate. This is hot sauce. Okay, this is what a lot of realtors aren't thinking of this. So I will literally call you up and say, listen, we have a buyer, they're approved, but I need a $15,000 buy down.
They actually have a sample of this if you wanted to go through that now, since you're chatting about it.
We'll do it at the end.
Okay.
Okay, conventional has some limits. What happened on my screen here? They have some limits, okay? You let us worry about those. But there are some limiting factors, okay? Seller can only give 3% if the buyer is only putting a certain amount down. Okay, if they're putting 10% plus, or 10 to 20, actually that's 25, that was an error. Remind me, Steph, on that one. It's 6%, 25% down or more, so mark that in your form there, it's a 9% seller credit.
Who's buying down 9%?
Sellers.
9%?
Sellers. So you have a property that is $800,000 and it's not moving, okay? And instead of reducing it $50,000 to attract a buyer, why not give a seller credit of $50,000?
I just thought that was relevant to your interest rate that you're paying.
No.
It's not. It's not. This is so interest rate is rate. Cost for rate is a different percentage. And we'll talk a little bit about that.
Okay.
Okay. So moving from, let's say, a 6.5 to a 6, okay, it does not cost a half a point.
Okay.
It's a different cost. Okay. Right? Love it. That it could cost 2 points to move it a half a point. So if I have a loan amount of $400,000, okay, and I want to go from a 6.5 to a 6, it might cost $8,000 to do that. That's what's called buying down points. okay? That $8,000 can come from a seller as a seller credit. Now I have a qualified buyer at 6% interest rate opposed to the 6.5.
So what's the equation to figure out how much it is? Because I thought it was 1% was 1 point.
That's when you call your lender up and go, this is your lane.
Okay.
I'll stay in my lane.
Okay.
And let's rock and roll.
Okay.
Okay? Make
Unfortunately,
sense?
there's really not an equation.
It changes, rates change every single day.
Sometimes twice a day or
Sometimes
3
twice.
times.
That's 3 times and it's crazy.
They were one thing at 8 a.m. and another at 10 a.m. today.
If you're able to get that seller credit though, that's a game changer for somebody that is not qualifying right now versus qualifying. It makes a huge difference.
Yeah.
We'll talk about that. Okay, seller concessions to go to closing costs, discounts, buy downs. We'll talk about that. FHA, we're gonna fly through this because I just went through all of it with conventional. A little more flexibility on an approved ratio, okay? Even though if you looked it up on Google, it says this ratio, however, with approved eligible, when we go to desktop underwriting, it's systematic and we get an approval, fantastic, we're rocking and rolling. A little more favorable on FICO scores, okay? So a little less than 620, right? So we can go down, we have a wholesale program that we can go down to 500, okay? But there's gotta be skin in the game. They gotta put more money down. There's gotta be some what's called compensating factors, meaning they gotta have some do-re-mi, okay? Keep it rolling here. Highlights, FHA, it's government loan. It is insured by HUD. Minimum down payment's 3.5. Upfront mortgage insurance is financed, so there's a upfront plus there's an MIP. That MIP, mortgage insurance premium, okay, opposed to PMI. It's a little difference there, right? So this is for the life of the loan. Going back to conventional, okay, on PMI, the loan to value, the borrower can request that to be removed, maybe with an appraisal or a refinance, but they can request that at 80% loan to value, okay? The servicer, after 2 years, has to remove it if it's 78% to value. So they pay a bunch of money towards the principal, market goes up, they could be at 78%, the servicer takes that off, but it has to be after 2 years of acquisition. Okay, follow me? All right. FHA, keep it going. Can use a gift fund, 100% gift funds. Buyer, we already talked about that. Can use with, somebody can be a non-occupying co-borrower. So you know what? So let's say my kid wants to buy a house and I'm gonna co-sign for them, but I have my own house, that we can still go FHA, okay? Because I'm not gonna live there with my kid. You already lived long enough with them, you know? Get out on your own. All right, first time home buyers, repeat, listen, everybody, okay? This is our lane. We figure out who fits in that box, okay? Requirements, minimum FICO, 3.5% down. So somebody says, well, there's down payment assistance. Well, we still have to calculate it based upon 3.5% down, okay? DPA, down payment assistance, we'll talk about that. Minimum FICO, there is some seasoning with bankruptcies, right? A little bit less. If you remember conventional, 4 years, 2 years, 2 and 1 year, okay? So somebody might have had a discharge bankruptcy, Chapter 7, we could potentially, this might be the only reason why they're doing an FHA opposed to a conventional, okay? They might have 20% down. Rad. You're not getting a conventional, yo. You're gonna pay mortgage insurance if you wanna buy a house today. Make sense? Okay? Check boxes, right? Little shorter seasoning on short sales and foreclosures. Properties allowed, SFR again, single family resident, condo. This is a big one, okay? This is where you guys have to do your due diligence when you're listing a home and when you're buying a home, okay? FHA and VA have a website, government entity, that you look up, is this condo approved, okay? Because it has to be on that list to go FHA. I received a call from somebody and said, hey Kevin, this thing's coming apart at the very end, and can you help me with it? And I'm like, what is it? Well, it's a townhouse. I said, townhouse. Okay, it's a townhouse? They go, well, on the assessor's side, it says condo/townhouse. Yeah, let me look it up. At the other website, yeah, it's not approved. Okay, it's actually expired. let me guess, they're doing an FHA loan. She goes, yeah, they're doing an FHA. I go, no, not happening. Okay, I said that's the reason why it's unwinding. And listen, I work magic, y'all, but I can't overcome the Govy.
Did it not work because it was actually a townhouse?
No, it was condo. It was a condo, and how you find that out is you don't just leave it up to the website. You actually go in the assessor's office. On this, when you scroll down on the property profile, there's the deeds. Click on the deed. Okay, the deed's going to tell you if it's in a condo community. The other tall tale is if there's a unit number. There's a unit number, odds are, you know, so when you guys are going, hey, I'm gonna buy, you know, we're gonna buy this house, you know, yeah, it says we can do FHA, but it's a condo. Condo is the red flag. Let me look it up. Let me have, you know, let me call Michael or Kevin and let's look it up. Okay.
Because
Hey, I am gonna, sorry, step in on that. We do offer one-time single
Yes, we do.
condo approvals. So don't, when Kevin says we don't do them if they're not approved.
Megan totally loves that process too, by the way.
Don't deter that because we can. I mean, it's a little bit more paperwork on our end, but we can do them if they are expired or they're not approved currently on the website. We can get stuff and we can submit it into our corporate office to where we can get a one-time approval to close if it's not approved with FHA.
So Megan, when we're going holy shit at the very end, is that going to close on time? Probably not going to close on time. Because if it has to go to court, eyeballs, y'all. Eyeballs take time. If Megan gets it, okay, we got to do the paperwork. Now we got to send it to corporate, more paperwork, Govy, blah, 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 eyeballs, eyeballs, eyeballs. If you're closing the next day and you find this out, odds are it's going to delay closing. But
if you find
out,
but you still close.
Let's get the deal done, yo.
Yes.
Let's get that, you know, well.
So just know that it's a red flag. Yeah. It's a red flag if it's not.
And don't ever go off of what the assessor says. When you're talking about condos or townhomes, I suggest either contacting us, if there's a way that we can look at it, or title. You don't want to assume because it's a whole different animal.
And sometimes listing agent put the wrong information in analysis.
If it's condo, look it up. If it's townhouse, confirm it's not a condo. Those are just the best practices, right?
If it's townhouse, you're good to go.
If it's a townhouse, but look it up.
Okay.
Look at the deed. Make sure it's a townhouse. But yes, townhouse, just like single family.
Because assessor is not always correct in that sense.
Gotcha.
Okay. All right, let's fly. We're flying. Okay, up to 6%. That's what I want you guys to know. Seller concession using FHA, they go up to 6%. What? That's rad. Okay. Love it, love it, love it. Fix and flip. Okay, not fix and flip, but FHA flip. So prior loan is on an FHA. They gotta wait to do another FHA on that property. It's property specific. Okay, so somebody buys a property on an FHA loan. They want to fix it up. They want to resell it. An FHA borrower can buy it, but there's got to be a seasoning period, okay, from the deed date, all right? They can go longer than 91 days, but a second appraisal is required, okay? Cool? Big. Romero, you're coming in. We're going to fly. We're going to fly through this. Cool.
I'll let you drive.
Long-winded.
I'll let you drive it.
Okay, go.
Just real quick though.
Ready, go.
You guys, this is a ton of information that we're giving you. And I know your brains are probably ready to explode.
No,
it's not. So just keep this in mind. When in doubt, reach out.
Right.
Okay, we will help you. If I don't know the answer, I'm gonna go to Kevin.
When in doubt, reach out.
That's right.
I love that.
That's what we're here for.
Ba-dum-bum-bum.
Yeah.
Okay, let's roll.
All right, so VA loans. This is kind of my area. I'm a veteran, so I love helping veterans get into new homes. So credit score down to 580.
Oops, sorry.
That's okay. Some DTI percentages, and this stuff is not what you need to worry about. Okay, that's our realm. That's our lane. We're gonna go and that's my job, our job, to make sure that everything's in line. Okay, next slide. They can do up to, or they can have zero money down, payment up to $2 million, and a payment up to $2 million with full entitlement. We will do the entitlement or verification to make sure that they are eligible for.
We do that at pre-approval.
At pre-approval, so you won't.
We can pull a cert of eligibility at any time for you guys.
So as soon as we're talking to that veteran, we're gonna get the DD 214, which is their discharge paper, and we're gonna get certificate of eligibility if they don't have it already. And if they do have it, we're gonna verify that the amounts on there are correct. Partial entitlement, 100% to county loan limit, updated, you guys are already aware of that. Down payment is determined by the certificate of eligibility, what I just talked about. So we will verify the amounts on there, make sure they are accurate. That's not anything you have to worry about. They can have a co-borrower, but they must be an occupying co-borrower's spouse or another vet to use a zero down option. Again, this is stuff that we will verify.
So if you have somebody that's a veteran and they got maybe a boyfriend, girlfriend, significant other that wants to go on a loan, y'all need to do it, tell them to get hitched.
Or if you're not sure, what are you gonna do? Reach out, right?
Right.
Requires a funding fee and no monthly mortgage interest.
Because we're on a recorded line, I'm gonna tell you it's not a good idea just to be like, hey, y'all need to get hitched, but just to let you know. They might have to put a down payment. Yeah.
Question about VA construction loan.
Okay.
How does that, do you see them? And
I have not seen it. I have not seen it.
So the only thing, the difference on VA new construction, are you talking new construction?
No, like construction to build or custom.
Well, that's a different
like,
line. That's yeah. So that's a whole different beast. Okay, so construction loan, I didn't put it in here because there's a bunch to it.
Sure.
Okay.
But I just have a scenario.
And we can totally do it. And it actually, I'm trying to think of my wholesale department because I was just in their guidelines regarding construction. I want to say it's 95% loan to value. It could be 100. I would have to check it out, but it follows the same guidelines. Construction to perm is a different draw component. The builder has to be vetted out and everything like that, but it can typically follow the same VA process. Okay.
But it can be done. You've seen it.
It can be done. Oh yeah, absolutely. It can be done. Yeah, I have a whole wholesale department. So with Finance America, real quickly, we have retail. Stephanie's back there flipping out. Okay, she's like, time. Okay, we have retail, that's us. We have a whole wholesale pillar, okay? We can do a whole lot outside the lines. We have reverse and we also have commercial.
Right.
Okay, so, but good question.
So in your scenario, if you want to get with us afterward, we can get into it a little bit more.
Rock and roll.
Get you. Perfect.
Next slide.
Perfect. Next slide. Ideal client. Pretty easy, right?
If they've served.
If they've served, currently serving, as long as we can do a certificate of eligibility, that tells us if they can use that program or not. Again, 580 minimum credit score.
Seasoning.
Yeah, seasoning, bankruptcies, foreclosures, short sales. Property types, primary residence, single family residence, condos must be VA approved. We will verify this stuff for you guys. So if you're on a home, reach out, hey, let's get this verified real quick, we will let you know right away. Man homes, that's okay, and the last one, 2 to 4 unit properties. So anything, the key thing is as soon as you land on a property, let us know. If it's in Reno, great. If it's in Carson, great. Just let us know where it is, zip code, and we'll make sure that pre-approvals and all that stuff are updated, yes.
And then manufactured homes, obviously they can be moved with the VA, correct?
They can
Be moved once from location.
They cannot be moved.
Or
Real
they can
property's
be
gotta be
older.
permanently converted.
must be converted to real property, it can't be older than
Manufactured homes
1976.
cannot be moved.
No,
They can
right,
be moved once, they can
Yes,
be moved
right.
from the manufacturer to the spot, but if they're moved after that,
You're done.
They're not financeable.
yeah.
Yep.
Personal.
But you guys can do older than 1977, right?
1970, June of 1978.
Six.
We'll figure that out.
Yeah.
876.
I think, I wanna say it's 78.
Okay.
I think it's 78. I'm going with 78. Well, whichever one of us is wrong, we're buying lunch.
So, 78.
I think it's June of 78.
Right, so seller concessions, getting back on track, all allowable closing costs. Guys, so back on track here, seller concessions can be used for closing costs, 4% cap towards discount. Who knows what a discount is? That's your buy down, right?
Yep.
Points in paying off, borrowers debt, so we can use that to pay off. USDA.
Grade A beef.
So USDA, ideal for your rural areas, get somebody with no money down or has very little money down, but they're okay living out in the sticks. Sponsored by the United States Department of Agriculture, upfront guarantee fee of 1% to use the program, and the cheapest monthly mortgage insurance premium for the life of the loan. Highlights, features 0 down payment, so 100% financing up to the appraised value, maximum income restrictions based on household size and county, so we can do that. Just access it and find out what the income limits are. So if they make a whole bunch of money, they're probably not going to qualify for this program. But let us know. If it has a dollar sign, a percentage behind it, that's our lane, home, that's you. Property must be eligible area in an eligible area to use the USD program, and there are maps on the internet to figure out where they are and which communities qualify. 620 minimum versus the 580 for VA, seasoning for Chapter 7, 13, and short sales. Foreclosures 3 years from the date of the foreclosure. Property types allowed: primary residence, single family residence, 1 unit only, condos, and man homes. And again, the restrictions on the man homes, when in doubt, reach out for that.
I just want to specify on the man homes, we do not lend on single units. They have to be double units.
Have to be a double wide, yes.
So.
Concessions include limited to 6%.
Sorry, get click happy.
Man. Limited 6%, so if you guys remember on the conventional, the FHA, those percentages vary. It's up to us to figure out which program is best for the buyer. It includes all closing costs, discount points, and prepaid items.
Thank you, sir. Okay, thanks, brother. Big round of applause. Good job, Michael. Thank you so much. Okay. So this is that coloring outside the lines. We have that wholesale program. We can color outside the lines. This is where we figure out what can we do, right? So, I mean, guys, there's low FICO, no PMI, I-10 loans, foreign nationals, a lot of different areas. Somebody wants to put title in an LLC, right? There's just a lot of areas in where we can help out, and obviously not follow the Fannie Freddie FHA guidelines, okay? So a lot of different bank statement loans. So if you guys 1099 employees, set up a business account, deposit all your accounts or all your deposits from your income into a business account, and then I can count 24 months of bank statements, okay? Investor cash flow, 1 day out of bankruptcy, a lot of different outside the box stuff, okay? So that's non-conforming mortgage, you're basically coloring outside the box, okay? Reverse, we did a reverse for purchase last month. So reverse is a phenomenal product for our senior / retirement community. So it's just some of the bullet points. Actually, we do have a product that's minimum age of 55. This is, if you guys have somebody that is looking to buy, okay, and they are over 55, do yourself a huge favor and the family and have them reach out, okay? I have an individual that I pre-approved yesterday. He's looking to buy a new construction. He's on a fixed income, $3,500 a month. He's actually approved for a $600,000 purchase. That's the bomb, okay? 3,500, take 35, 48%. Think about the normal, regular forward, how we approve. He's approved, so pretty awesome, okay? That's all your reverse. Jumbo products, we talked about it. Over what loan limit?
715.
Boom, rock and roll, you got it, okay? So up to, Finance America has up to $3 million loan programs. There are definitely some outside of the lines that we can get up to 20 million, excuse me. So we have some other opportunities. Bottom line on jumbo, better credit, you gotta have better credit, they gotta have money in the bank, they gotta have more down.
And it's a longer process. So
longer process,
need to be written a little longer.
More eyeballs, right? Do like a 45-day escrow, and so on. Low process, Megan Meggs, we gotta fly, we're gonna get in trouble. This is Megan's world.
Hi guys, I'm Megan. I'm a loan processor. So after you guys go into contract, Kevin and Angela have pre-approved, all this stuff is ready. They get title fees, I get the file. So it comes to me, I review all of the documentation, income, assets. If they're retired, I do social security income, everything. I review all of that. I cross T's and I triple dot I's, and I make sure that what they pre-approved them on is what we have the documentation for. And your contract matches, what our inspections are that we're doing. I order verifications if I have to. I order appraisals. If we don't need an appraisal, a PIW, even better, because that saves us a lot of time, as we all know. It then goes to underwriting. I'm the one that generally decides when it's going, because I like to get my files with everything in, so it's less amount of stuff for the borrower to have to get. I then introduce myself and reach out to the client and ask them what else is needed, because I've gotten an approval from an underwriter saying, hey, you get X, Y, and Z, this loan's approved and it's going to docs. So I reach out to the client. Sometimes Angela will reach out to your guys to get, maybe we need an addendum signed. Maybe we need an FHA mandatory clause signed by the seller and their agent. She will reach out to you guys for that, but then I will reach out for all of the other stuff, income, assets, debt, any of that stuff, okay? So once I basically get all of that stuff back, I resubmit it back to underwriting and they say, all right, you guys are clear to close and you're going to docs. So I then submit for docs from there. In the meantime of all that, the CD will get ordered. So you guys know what a CD is. It's a closing disclosure. We have to get that out at least 3 days prior to the close date.
So in other words, we can't just say, hey, here you go, get in and sign, and then they gotta review that, right?
So basically there's 3 requirements. It's been approved by the underwriter and the file's locked. The other big thing, they have insurance. I don't care if it's the binder, I just need an insurance quote. So you guys can help out too when you go into contract. Hey, start shopping for insurance. Start looking for insurance. Throw out Bridget's card. Throw out another business referral partner that you guys have. It just helps us out because that's the main thing that holds us up is the insurance part of loans.
Hey, Meds, there's another thing on here that working with Finance America, they don't really need to have. What would that be?
So we do not require that the appraisal is received in order to go in for a closing disclosure.
Ooh, there are other people that have to have that, folks.
There are under lenders that require you have the appraisal back before they can go in to submit for
And
their
that's
CD.
a big thing for us because we pride ourselves on getting that CD out early, not waiting till holy crap, now we gotta hold these 3 days to close.
So basically they acknowledge the CD and after 3 days after that, we can sign them. We like to get it out sooner than later, so it's already done and taken care of. These are, CTC is clear to close. To funding, it's been approved, appraisal signed off by, or the approval is signed off by the underwriter, appraisal signed off, the CD's issued, doesn't necessarily have to be acknowledged by then, but we like it to be because it will hold us up getting in for docs. So our CTC process is up to 48 hours. I've seen them come out in 3 hours. I've seen them come out in 24 hours, but it's up to 48 hours that we have to let you guys know. Docs out, meaning that we have gotten clear to close. They've acknowledged their CD, all parties, and we submit for docs. It's up to 24 hours. We pride ourselves in doing what's considered an e-closing, where about 85% of their docs are sent to them in their email. So they only spend about 15 or 20 minutes at title signing the note, the deed.
What?
Yeah. So, signing time, meaning that, once our docs are out, us scheduling, I mean, I know you guys work closely with title to schedule, but I also do my part in balancing a CD with title, getting, hey, have you guys scheduled these people? Hey, we've sent out, updates to them, letting them know, hey, you're doing the e-closing process. Go into your email, get these done sooner than later, and get you closed as soon as possible. Funding is basically if they sign before 3 o'clock, let's just say they signed before 3 o'clock today, they will be able to fund tomorrow.
If it's after 3 o'clock, it's best efforts.
It is.
You guys don't even know how many times I hear that from Megan. Best efforts. Best efforts.
And I'm not gonna toot our funders' horns, but
we almost always do.
It does, and that's why we do the e-closing process too, because 80% of their docs are already signed and can be reviewed. So it's just basically getting the signed ones. Well, with all of those timelines, there are possibilities that they get held up.
There's no possibilities, right?
So I know everybody's perfect and everything gets done in time. So there are timelines. Our timelines are based off of everything going perfect. and everything, getting us everything that we need on time, okay? So if there's not, we know there's certain things, okay? There's holidays. We just had one, Labor Day, okay? I had a contract that said our close date was the 4th. I'm like, well, we can't close on a holiday, so that now bumps it up to the Friday before, which now puts everybody in rush mode if they were planning for a different day, okay? There is non-responsive clients. We have them. We try not to because we are good at communication and emailing and calling and following up. Wiring issues, more than none. I try to get my stuff balanced and the wire instructions sent to the client to wire them sooner than later, because we've seen people that go, oh, well, I was at the bank at 11 o'clock. The Fed, something happened, there was a hiccup, and their wire didn't go out. We cannot fund a loan if title has not received their wire. So we try to do it a couple days early to get it to them in the notification, hey, get to the bank, get this set up for wiring. It's better to be ahead than same day, okay? So just make sure that when you guys are going into contracts that we just stress this. I know you guys all do, because we all do too, but you always will run into them.
Thanks, Megan Miggs. All right. All right, last bit so we can fly through this. Complications, are there challenges? Yes. Okay, do not everything on here, right? Here's what I would tell you guys is you know, we reiterate, we talk to our buyers. I need you guys to talk to your buyers. Don't get your credit pulled, don't go buy a new car, don't max out your credit cards, don't do, you know, what else? Okay, so applying for new credit card. This can be like, I'm in Kohl's and I want a 15% discount, and yeah, I want to have that discount. They just applied for credit. Here's the challenge. I want real quickly. We pull a refresh on inquiries 10 days prior to close.
Meaning
for this
you pull
very
their
reason.
credit
Meaning that
again?
we refresh their credit. We have to see if there's any inquiries. If there's an inquiry on there, what happens is now we have to order what's called a credit supplement from the Bureau to make sure that there is no additional lines that we are not counting in their debt to income ratio. Guess how long that credit supplement can take?
3 days.
A week.
Over a week. Okay, it can be almost 2 weeks. Okay, if we pull that in 10 days, we're closing in 10 days. Closing in 10 days. Kohl's, line of credit. Oh no, we order it. 14 days. What happens to our close date? Gets moved. Okay, nobody's fault but the buyers. Okay, so,
and if that refresh expires, we have to re-pull it.
So keep that in mind. This is something that all investors, all lenders are hyper focused on. Okay, so we have to make sure that now again, it all comes back to debt to income ratio, right guys? Debt to income ratio is important. That's how they qualify. Okay, all right, whoa. Sales, got to help you kick some butt here, right? Who typed ass? All right, first, sell and buy down. We talked about this real quick. Here's the example. And then on the last page is that review. I want you guys to go through it. Mark in the comments that Kevin talked to me. Okay, so here's the buy down. Here's the power of it, okay? $560 list price, okay? We just got an example, 6.625 interest rate. The conversation you're going to have as an agent, do you want to reduce the price? The conversation you're going to have with the buyer is, let's offer less. Okay, it's a softer market. Okay, $540 purchase price, same interest rate, saves them, saves them $103 a month. Okay, here's the power of an interest rate buy down. Same list price, same purchase price, okay? Lower interest rate because now we have $20,000 to buy down the rate. Rate goes to a 5.289. Now we're looking at a savings of $400 a month.
And what's their commission do?
What does your commission do if it goes to 540? It drops. What's your commission do if it stays at 560, y'all? Come on now, show me the money, right? Okay, so buy down is powerful. This is a car payment. So if I have somebody that I'm trying to pre-approve and they have a car payment, they just went and bought one, okay? Well, now you don't qualify for a home loan, But wait a sec, you buy down the rate, I let you guys know when you go and make that offer, now all of a sudden, that lower interest rate can help them get off the bench. We got to get people off the bench, okay? Last is, in transactions right now, 1 out of 6 transactions are investors, okay? So if you don't know how to work with investors we worked on this weekend, right? Investors look at a cash-to-cash return. As an agent, you will get very used to going, okay, here's your payment, here's your return. Mentally, you'll be good at year 1, okay? In this market space, though, if you're having a conversation with year 1 in this example, it's red, meaning that what? There's not a return. Why? Because of higher interest rate. Okay, you follow me? You guys call us, we can actually do a 9-year forecast. It is a great opportunity for investors to buy right now because the competition is not out there, okay? There is 1 in 6 transaction is an investor, and now you are able to forecast out their return on investment and go, listen, Mr. Investor, Mrs. Investor, you buy now, yes, there's a negative return for the first 2. However, you're going to have positive gain over those 9 years. Okay? Good stuff? Think that'll help you?
Good stuff.
Okay, that's sales, right? All right. Do me a favor, grab your phone. So we did a Google profile class, and so this is to rate us on our Google page. So because we're all about rates, right? We are ratings, right? We all want a 5-star, right? So do me a favor, click on that. That'll give you guys, get to my Google page, rock and roll with that. Nothing shy of 5, please. If you're gonna give me less than 5, then your battery's dead, and we don't worry about it.
How do you cut the stars in half?
Okay, don't cut those stars in half either. It's always full of stars in this world. Okay, we have an upcoming lunch and learns. We have our Winnemucca reverse for purchase. Y'all can carpool out there. Fernley, next week is going to be, or next week, what am I saying? Next month, the 13th, is lead conversion masterclass, and then we will also have one here in Reno. Okay?
If you want to come to those classes and you want to register now, just use that QR code.
Okay, so we went way over time, so I apologize. It's a lot. It's like a fire hydrant. It's a ton. It's a ton. So just know that we are available. Reach out. Have questions. You guys don't have to know all of this stuff. That's why you rely on a great lender partner. Okay, we swim through this minutia. Okay. All we need is you guys to have kind of that 30,000-foot view conversation, and then throw them our way, okay? And we'll take it from there. And then again, we just appreciate you guys. Oh, sorry, you guys are trying to click that. Did you get it? You're doing it? That's all right. It's all right. I think it might be on your little hand up.
No.
It's not. It's not stuff. No. Okay. So, guys, appreciate you. Any questions? Any questions? There was a ton.